Everyone, Bob Jablonsky here with Jablonsky Tax Relief. If you're dealing with an IRS payroll garnishment or you're worried one might be coming, this is one of the most important videos you will ever watch. Today, I'm going to explain what a payroll garnishment is, why the IRS issues them, and most importantly, how you can stop or avoid one before your paycheck gets hit. Here's what most people don't realize. When the IRS garnishes your paycheck, they don't just take a small percentage. They decide how much you're allowed to keep. And for many taxpayers, that's barely enough to live on. An IRS payroll garnishment, also called a wage levy, is when the IRS orders your employer to send a portion of your paycheck directly to them. Unlike most creditors, where they just take a percentage of your paycheck, the IRS takes all except exemption amount method. So what does this mean? This means the IRS determines how much you get to keep, and they garnish everything above that amount. The amount you keep is based only on your filing status and number of dependents. The one big difference between a wage levy and a bank levy is, as I mentioned in a previous video, a bank levy is one time. If the IRS wants to levy your bank account again, they have to issue a second bank levy or a third bank levy and keep going. With a payroll garnishment, the IRS can garnish week after week until the debt is paid or until you take action. So it's not just one paycheck, it continues until the debt is paid or until you take some action to eliminate that payroll garnishment. So let's talk about why taxpayers get their payroll checks garnished. They don't just happen overnight. Before the IRS can take your paycheck, they have to send you a series of notices. Typically, these include the CP-14, which is the first bill, and it tells you it's a demand for payment. They then typically send the CP-501, CP-503, and CP-504, each one of them getting more and more urgent. Finally, they send the final notice of intent to levy, which is typically on an LT11 notice or a letter 1058. This final notice is the key. Once 30 days pass after they send it, the IRS can legally garnish your wages. So what's happening is you may get a payroll garnishment if you ignored prior IRS letters, you defaulted on a payment plan, perhaps you have unfiled tax returns, the IRS believes you're not cooperating, and you owe back taxes and didn't respond in time. Payroll garnishment is one of the strongest enforcement tools the IRS has, and they use it when they think you are not engaging with them. So, how much can they take? Well, the IRS can garnish a huge portion of your paycheck. Like we mentioned, they don't use a percentage, they use an exemption table, which determines the amount you're allowed to keep, and that's based solely on not on your expenses, living expenses, but on your filing status, the number of dependents you have, and your pay frequency. Everything above that exemption amount goes to the IRS. Your payroll department, your company, they have no choice in this. This is basically, they're following the IRS's guidelines and requirements that have been sent to them. That is why IRS garnishments hit so hard and why most taxpayers can't afford to wait for them to happen. So, how can you avoid a garnishment? Well, you can avoid a payroll garnishment usually if you take action before the IRS issues the final notice. Here's some things that work. You can set up an installment agreement. You can request currently not collectible status. You can file the missing returns that they're requiring. You can challenge any incorrect IRS balances. And sometimes it can help to work with a tax resolution professional who can help you resolve this effectively. The earlier you respond, the more options you have. So, can you get a payroll garnishment removed once it's been issued? Yes, you can, but the quicker you act, the better the outcome is going to be for you. Some of the things that'll work will be one, set up a payment plan. When you set up a payment plan, the IRS often releases the garnishment. The second thing is show the a hardship that it's being created for you and request CNC status if you qualify. If the garnishment prevents you from paying basic living expenses, you may qualify to have collections stop. Maybe you haven't filed all your missing tax returns, and along with owing money, you have missing tax returns. You're going to have to file those returns to get the IRS to stop levying you. Fourth, if you qualify, submit an offer in compromise. An offer in compromise doesn't automatically stop a levy. Sometimes a tax pro can negotiate temporary relief while it's being reviewed. Another way is if the IRS has made an error or you are the wrong person, which has been known to happen, if it's been issued incorrectly, get it reversed. So when you should not handle this alone, when the IRS is taking your paycheck, time is against you. If you owe 25,000, 50,000, have substantial amount that you owe to the government, you have unfiled returns, or if you've already received the final notice and that clock is ticking, a tax professional can usually get faster results and protect more of your income. This is what I do every day at Jablonsky Tax Relief. A payroll garnishment can feel devastating, but it doesn't have to be permanent. If you're facing a wage levy or if you receive letters threatening one, contact me at Jablonsky Tax Relief by calling 972-821-1991 or clicking the link in the description below to get directly on my calendar. We help taxpayers nationwide stop garnishments, negotiate with the IRS, and fix their tax problems for good. Also, be sure to like the video, subscribe, and leave your IRS questions in the comments below.